Let's continue this conversation now with two more guests. Austan Goolsbee, he served as the chairman of the Council of Economic Advisors under President Obama. He's now a professor at the University of Chicago's Booth School of Business. And Tyler Goodspeed, he was acting Council of Economic Advisors chairman under President Trump. He's now an adjunct scholar at the Cato Institute and a Hoover Institution fellow. Austan, I just, in the old days, I always thought that you were always on the low end of how many jobs we were going to add. Did this surprise you today?
It totally surprised me. I mean, this is a jaw-dropping number. There has never been a time when we got the unemployment rate down this low where we're adding 500,000 jobs. I mean, I thought that given all the rate increases that we would probably have a disappointment or a miss. Now, you're never going to hear me criticize a jobs number where we got 500,000 jobs. I would highlight there are two areas of not weakness but danger. The first is if you've got GDP shrinking when you're adding jobs at this kind of rate, it has to mean that productivity is going down. And if productivity is going down, what that's going to imply for wages is not great. And so you're probably going to see a continuation of this kind of negative real wage growth. But the second thing is this is fundamentally not stable. There are not enough people to keep adding 500,000 jobs a month. So on pretty rapid order, it has to stop. We have to reach what is a de facto full employment, and then the numbers are not going to be as big. And so people can't be surprised when that happens.
Tyler, since this is all after the once-in-a-century pandemic, should we just stop trying to figure out, what to expect? And whatever happens, it seems like it's new territory. We're in an odd sort of environment, are we not?
We are in an odd environment, and I would say part of the oddity of that environment is this bifurcation between what's going on in the goods market and what's going on in the services sector. So it looks like 85% of the job gains last month were in the services sector. And what's really interesting is that we saw in 2021 demand for goods, real demand for goods, rose substantially above pre-pandemic trend. It rose to a peak of about 11% above pre-pandemic trend. That's been coming down, and it's now about 3% above trend. Demand for services plummeted in 2020, and we still haven't quite gotten back to pre-pandemic trends. I think this is part of a goods sector going back to normal and then probably into recessionary territory eventually, and the services sector is continuing to recover. And that's part of the reason I think, as Austan noted, we've seen productivity decline really substantially. In part also because when real wages are declining by as much as they have over the past year, and they're down about 6% below pre-pandemic trend if you use the real employment cost index, that's going to incentivize a bit of labor hoarding.
The market reaction is kind of interesting, Austan. Is it as simple as the Fed has more work to do? But if we really are seeing some commodities roll over and some supply chain issues eventually, are not going to be as bad as they were, I would think that.
Yeah, right. It should help.
That's what I would think.
In a way, we got to see what's bad about negative supply shocks. If what we're going to get is the unwinding of negative supply shocks, positive supply shocks, that's wonderful. We're going to be able to potentially reduce inflation without wrecking the economy, without having recession. I think it is as simple. Your first statement, I think it feels like it is as simple as the market looks and says, uh-oh, the Fed is going to raise rates more because the jobs number was so big.
It's crazy.
So I feel like until something else happens, that's what.
Think about it, though. It's like, what if we really did see inflation moderate to some extent and had really, but we're adding too many jobs. The Fed's like, yeah, I see inflation's coming down, but we got to kill these jobs. I mean, this is just way too many jobs. That makes no sense.
That doesn't make sense.
But that's what we're seeing. But